How do I report Roth IRA withdrawals on my taxes? Are you wondering how to report your Roth Individual Retirement Account withdrawals on your taxes? It can be a bit tricky, but understanding the rules will help you navigate this process smoothly. First, it is essential to know whether your withdrawal is qualified or non-qualified. This distinction will determine how you report it and if you owe any taxes. When you make contributions to a Roth Individual Retirement Account, you do so with after-tax dollars. This means you can withdraw your original contributions at any time without paying taxes or penalties. However, the earnings on those contributions are a different story. If you withdraw earnings before meeting certain conditions, you may face taxes and penalties. Let's start with qualified distributions. These are tax-free and do not need to be reported as taxable income. To qualify, your Roth Individual Retirement Account must have been open for at least 5 years. Additionally, you must be at least 59.5 years old or meet other criteria like disability or being a first-time homebuyer. Your financial institution will send you Form 1099-R, which shows the distribution and a code indicating if it is qualified. Since qualified distributions are not taxable, you typically do not need to include them on your tax return. Now, what about non-qualified distributions? If you withdraw earnings before the age of 59.5 or before the 5-year holding period, those earnings may be subject to income tax and a 10% early withdrawal penalty unless you qualify for an exception. However, your contributions are still tax-free. To report a non-qualified distribution, you will need to file Internal Revenue Service Form 8606. This form helps determine the taxable portion of your withdrawal and whether any penalties apply. It is also important to keep track of your contributions and earnings. Financial institutions like banks and credit unions provide account statements that show this information. The Internal Revenue Service ordering rules state that contributions are treated as withdrawn first, followed by conversions, and then earnings. This ordering is crucial for determining taxability. When you take a distribution, your financial institution will send you Form 1099-R by the end of January following the tax year of the withdrawal. Review this form carefully to check the distribution code and amount. If you have non-qualified distributions, use Form 8606 to report them and calculate any taxable income. Certain situations allow you to withdraw earnings early without facing penalties. These include qualified education expenses, first-time home purchases up to $10,000, disability, or specific medical expenses. Even if you qualify for an exception, earnings may still be subject to income tax unless the distribution is qualified. In summary, reporting Roth Individual Retirement Account withdrawals involves understanding whether they are qualified or non-qualified. Qualified distributions are tax-free and do not need to be reported as income. Non-qualified distributions requiring filing Form 8606 to report any taxable earnings. Keeping accurate records and understanding the ordering rules will help you avoid unnecessary taxes and penalties.